The majority of Americans are investing their money incorrectly. So by the end of this video, I want to make sure that you are investing your money the right way and have all of your bases covered. My name is Carmen, and before we jump into the video, make sure that you subscribe to this channel and hit the notification bell so that you can be notified when we post new videos. So the very first thing that you should be doing is making sure that you have a sound financial plan or a budget. Let's call it a budget, and ensuring that you have your funds allocated appropriately. What we consider an appropriate budget at the Wealth Nation channel is a plan that consists of 50% going towards your needs, 30% going towards your wants, and 20% of your income going towards your savings. And once you have this all allocated for your income on a monthly basis, you will be able to make sure that you are saving your money efficiently, you're paying yourself first, and that you are not overextending yourself with your day-to-day expenses. So when it comes to investing, when you make sure that you are paying yourself at least 20% every single month with your income, you're going to use that 20% to start filling different buckets. So this is what I'm talking about in the order as far as investing is concerned. If you don't have any of these covered yet, you should not be investing. Okay, so let's go ahead and get started. The very first account that you should be funding is what we like to call the ABC fund. And what the ABC fund is for large purchases. Anything that is $2,000 or less, say your car breaks down, say you need to replace something within your house, you have at least $2,000 saved so that it doesn't cause you to go into debt to pay for these unexpected expenses. So we call our ABC account anything that is ABC, anything that comes up. That account should be a savings account at your bank that you have funded up to $2,000. Now, the next account that we think that should be funded after that is what we consider your 6 months of needs. So we want to make sure that should your income fluctuate, you at least have 6 months of your needs saved. So if anything were to happen, you make sure that you can keep the lights on and you can maintain the roof over your head should anything change. So again, making sure that the ABC account is funded first, then your stash account is funded next, and you're going to be using the 20% of your income to fund these buckets. Okay, so we haven't said anything about investing up to this point. Now, while you are funding the ABC account and while you are working on funding the stash account, in the background, you should be seriously considering to plan for your family. And what we mean by family planning is ensuring that you have life insurance on hand and that you are covered should something happen to you, because we never know when death is going to come. And as we are out working and ensuring we have income to provide for our family, we need to make sure that that income is insured. So if you make $100,000 or $500,000, whatever the case may be, you need to make sure that you have enough insurance on hand to cover yourself should something happen to you. And you want to make sure that your family will be sustained for not just a few years. You want to make sure that their income will be sustained for at least 20 plus years, right? If not into the next generation. So we always say the bare minimum insurance you should have is 10 times your income. So if you make $100,000, 10 times that is $1 million. That is a minimum that you need to have in insurance to ensure that you are able to sustain your income for your family should something happen to you. So with regards to the family planning, that we consider is the third step while you are working on funding your ABC and your stash account. Once all of that is covered and you have all of those bases covered, then we suggest that you take that 20% to then start investing and creating cash flow. And as you work your plan, what we consider the 20-50-30 plan, right? So 20% of your income is going to savings, 50% is going to your needs, and 30% is going to wants. All of that money could be changing. Those ratios could be changing because once you see how quickly you can save money, once you see the power of paying yourself first, you may start adjusting those ratios so that you can pay yourself more, meaning that 20% might change to 25%, 30%, 50%. Imagine how much more money you can be investing annually if you are paying yourself 50% of your income every single month. Your savings is really what changes your opportunity to invest more money so that you can start creating cash cash flow for yourself and your family. So that's why it's important for you to comprehend these steps that I'm sharing with you, because it doesn't make sense for you to start investing unless you have your bases covered to ensure your ABC fund is accounted for, your stash account is accounted for, and additionally, you make sure that your income is accounted for by having the proper life insurance in place. And if you need help establishing your life insurance, then definitely click on the link below. We would love to see what your options are as far as being able to ensure that you have coverage for your family and to be able to see what your goals are. So what we always talk about on the Wealth Nation channel is how to take the cash inside your policy and use that to invest so that you can create sound investments, so that you can create double opportunities to earn compound interest inside your policy and whatever interest you're earning with your investments. And when you marry those two together, that just catapults everything that you're trying to do. So again, if you want to learn more on how to do that, definitely click on the link below. We would love to help you at the Wealth Nation. So I hope all of this information was helpful in making sure that we address what needs to happen and in what order you should be applying your income to ensure you have everything that you need should something happen. Because what we find happens far too often is so many people are so excited to invest that they don't have any savings in place, or they have to liquidate their investments. They are not savings accounts. You don't want to ever liquidate your investments, because that is going to affect the growth within your investments. So that's why we want to make sure that you have adequate savings in place, because if your income fluctuates or if your refrigerator breaks, you need to make sure that you have that money on hand and that you aren't dipping into your investments. So if you are lopsided or backwards in this, then take a moment, evaluate what it is that you need to do and take the necessary steps to ensure that you have your savings in place, you have your family planning in place, and then you can move on to investing. And as you start creating more money within your investments, you need to think about how that is going to affect the family planning, because as you are creating more cash flow, that is going to increase your income. And as your income goes up, your family planning, meaning your insurance, should go up as well. Because at the end of the day, you need to be looking at life insurance as insurance for your income. And that should match the amount of income that is coming into your household, whether it be your income or whether it be your investments. Always make sure that you have enough insurance on hand to cover all of the money that is circulating inside your household. And if you want to know how to invest using a life insurance policy, the cash value that grows inside of the policy, then definitely check out our next video so we can teach you all the things that Darius and I do. And don't forget to own your own lifestyle, or someone else will.